Rebels, the software sector is moving. Some stocks are recovering, but not all are faring so well. Also, 5 companies that some people believe might get bought out. All that and more on today's Rebels Edge.
All right. Here we go again. I'll tell you what, if John is gone, we got a guy who can come in here and make John, well, actually, John does a good job. But let me tell you this. But Justin, you always do a great job, and I always appreciate you because I know how busy you are, and I know what time of day it is in your part of the world. So we really, really appreciate you stepping in like you always do. And I'm looking forward to this whole thing. There's a lot going on, man, in the markets. I mean, it's absolutely crazy. I can't remember when the last time was that you were on here with us, but I'll tell you what, the ups, the downs, the spikes in volatility, the pullbacks in volatility, getting up to 23, getting back to 16, 17. I mean, it's been all over the place, but what's been going on and what are you watching closest, man?
You know what I'm watching? Actually, a lot of people talk to me about this, and they talk about you when they talk about volatility, and they say that you've had this thing you've pointed out in the VIX that no one else talks about for the longest time, and it's so true, which is that the VIX, no matter what is going on, just has so much trouble getting above 20. And it's so true. Even the other day, even last week, you know, everybody's complaining, and John had a great piece about it yesterday, right? Everybody's talking about like the sky is falling and you need to be able to sit through some of these drawdowns. But here's the VIX sitting above 20 for what, a day? And then here we are right back down again.
Yeah, well, thank you. And we'll talk about a little bit more of that in just a second. But as far as the macro side of things, what I find really interesting is the retail side of things having the guts to go in there with the inflows into the software world. I mean, things were falling apart, not looking so great. People on TV all, of course, jump on the bandwagon as soon as they can. It's like, oh, yeah, the sky is falling. This is happening. Well, I'm not sure either of that is happening. The sky is not necessarily falling, but there are a lot of opportunities out there. And, you know, with record flows from the retail side coming in on the software on those pullbacks. So I thought that was pretty interesting. And then you just look at what's going on across a lot of different pieces of this puzzle that we call the consumer side of things. You've got Disney, you've got Nike, you've got Home Depot, you've got American Express, you've got all of these, Microsoft, Cisco, Amazon. They're all sort of doing pretty well today. So anyway, not every single one is killing it. I'm just saying that, you know, you look over and you see some of the names that are in the positive territory and you're like, wow, okay. Things are starting to move. That's the macro for me. What about you?
Pete, do you want my nice macro or the macro where I talk some crap? Which one?
Definitely number 2.
Okay. If I have to hear one more idiot talk about the yen carry trade, which is dead and has been a dead narrative for the last year and a half, I'm going to pull my hair out. I talked about this at length in the Rebel Roundup, but here's the short version. It's dead. It's a 200 at its max. It had the total value of 200 billion. That's the size of T-Mobile. And everyone's saying, oh, this is going to crash the NASDAQ. No, it didn't crash the NASDAQ when it was at peak. It's mostly unwound. And you have all these losers on TV talking about, oh, well, you know, you've got this yen carry trade. The only reason they're saying it is because it sounds smart, but they sound stupid if you actually know what the data is. So that's my macro minute. No more about this yen carry trade. It's dead. It's not happening.
I love that. That's great, man. And you know what? You're right on all counts. I'm sitting there listening to you, and I'm thinking, I used to sit there next to a lot of these folks, and I'd look at them, and I'm like, really? That's where you're going?
Think about
right
some
now?
of them in particular.
It's just amazing. All right. I'm going to get into this, and then I'm going to get you a little bit of a chance on those betting markets that are so much fun. But I'm just going to say this. We talked about volatility right at the top. I'd like to hit it one last time, which is, we're a little bit short of 18 early this morning. We're sitting here right now, call it between 7:15 and 7:50, 17:50 and 17:15. It's in a very tight little spot right now. The thing about it that I think people don't understand is, yes, and I appreciate what you were saying about volatility, but yeah, it got up to 23. That was a big number not too many days ago. And the sustainability of the VIX has just been not there. It pulls right back once and again. And we've been seeing that time and time again. So I think we're still in that sort of a channel, and we'll see if we hold on to that. But from what we're seeing, at least in the early part of today, the first half of the day, we aren't seeing a whole lot of volatility, really. We're seeing a little bit of a pullback on some things, but we're also looking at a Dow that's trading anywhere between 250 points to 300 points on the upside, despite the fact that the NASDAQ's really not doing a whole heck of a lot. So when I look over at the S&P, which is the measure for the VIX, up 10 or 12, that seems to be a pretty calm day to me.
Yeah, absolutely. You said it the best. I'll talk about the prediction markets real quick. So one that we were looking at is one that John had submitted, and this is about the very controversial halftime show. It feels like the most controversial halftime show that I've seen or heard about from the Super Bowl ever since, man, I can't remember if the Justin Timberlake thing from my youth was a Super Bowl thing or
that was Super Bowl. Yep.
Okay, yeah, probably maybe since that one. yeah, but in any case, so people were betting on the number of views of Bad Bunny's halftime show. It ended up settling around 40 to 50 million views within the first day. And if this is some way that you like to make money and you had a good inclination of this, then by all means you could go for it. I saw a statistic that was talking about, it looks like Turning Point USA's stream where they ran sort of a counter Super Bowl with Kid Rock. I think that one had about 20 million total views since posting.
Wow.
But that was as of February 9th. So pretty good numbers there too, especially for something that was streaming on YouTube that I know of. So pretty cool. But on the prediction market side of things, the thing that I think is a little bit more interesting is this market that no one's really talking about. Which companies will be acquired before 2027?
Yeah.
Now, a lot of these companies, Pizza Hut, Ubisoft, Perplexity, who cares, right? They're not publicly traded. So that's neither here nor there. If someone acquires Perplexity, that's cool, but that doesn't really matter for us. But, one name I will tell you, in fact, two, to really look out for, there's GitLab. We do see some UOA there from time to time. And one more, there's this really big space, and Pete, you know where I'm going with this. It's the data center space. We've been talking about this for a while. Now, if there happened to be a data center name that's big but small enough to be acquired, got big contracts with, somebody big like Microsoft, and is already owned by somebody big, like, maybe NVIDIA owns maybe 11% of this name already from my knowledge. And they've got a pretty good balance sheet, don't owe a lot of people money, which is pretty rare in the big growth data center space. Maybe that would be a good idea to maybe acquire them. By the way, somebody came in. Now, we don't look at smart money buys in the prediction market at all, but somebody did come in not so long ago and bought enough to boost that Nebius Group, NBIS markets acquisition likelihood in 2026 up to, I think, 80 or 90% at one point. And it sort of fell back down, but that's still a few $1,000,000 that someone's spending to make that prediction. And all I would say is that if you guys see any UOA out there, unusual options activity in GitLab or Nebius, doesn't have to mean anything. But if there's one way that they would probably be able to tell us that that's going to happen, it might be through that UOA.
Yep, I'm with you all the way, man. Every time we see UOA, and specifically in Nebius, I'm like, I wonder what that is. Are they looking for a bump or are they looking for a jump?
Yeah.
And a jump being bought. So we'll see. I think your read on that is fantastic. Great job, man. That's awesome. How about some Upwork? Let's jump onto this son of a gun. So, it got hit hard. And why did it get hit hard? Well, they issued weaker than expected short-term guidance. This is the shorter-term guidance, but their year-out outlook was actually pretty decent. So that's one of those things where it's like a push and a pull. Well, in this particular case, it turns out that this thing was a drop. And folks actually started going and hitting as fast as they could to get out of this thing, down about 18 or 20%. And oh, by the way, we had a little bit of unusual option activity in this one. So I think that makes it even more interesting. What were they doing? Well, they were buying puts, not buying calls. They're buying puts. Why would they buy puts? Why would they pay $1.60 for these? Because they think it's going down. And it looks like they might have been pretty right on this one. Look at that close from 18.79 to 14.25, call it. Pretty significant drop to the downside, well over 20%. And those options absolutely should have pretty well exploded. So I think people are pretty excited about that one as well. What do you think about this particular stock, though? Is it an overreaction, do you think, or do you think it makes sense that for the short-term guidance that these guys are getting pummeled pretty good right now?
I think with anything in the software sector this week, and you've got a lot to look for in the software sector this week from, the coins and hoods and et cetera. You've got the shop, everything like that. There's probably going to be some winners that come out and suck in all the money from the people who are leaving places like Upwork and the other stocks that maybe didn't give such great guidance. Personally, I think Upwork's probably, whether it's an overreaction or not, I could picture them being probably stuck in a not so great range until their next earnings or everyone forgets about this, just because I have a hunch that the money that comes out of Upwork probably isn't going to find its way back into Upwork, which isn't really too popular of a name anyway. It's probably going to go into whatever other software style name took a big beating over the last month, but ends up coming out with great guidance. You know what I mean? That's what I personally think.
I got you. All right, we're going to jump to Credo. That one was the UOA. That was interesting that UOA was there for us on Upwork. But Credo's interesting. High-speed connectivity. They raised their Q3 guidance, their outlook. It's amazing how strong and the momentum that these guys have, which is why the stock jumped up 15% pretty quickly. They're talking about the full year 2027. I mean, look at that chart. I mean, that's a heck of a move. And it wasn't just today's move. How about the move off of the early parts of February for this stock, where it was back dipping underneath 100, and here they are at 137. Revenue growth of about 200% year over year. I'd say that's a pretty damn good number. That explains to me why exactly, even though it's already made that jump over the last week, that this week we're seeing this on this news getting even more. So pretty daggone strong, I would say, pretty impressive. By the way, they're even going to come out in early March, and they're going to be discussing some of these results, because some of the results that they put up were pretty outlandish. And yet I think they want to just make sure that people are very clear on what they're doing and what the direction is. And they want to have a scheduled conference call then. So that says even more about what Credo is really doing inside the C-suite.
Yeah, and I mean, you're exactly right. That move off of the early part of February. So over the last 4 candles, from the low of, it looks like 94.19 to the high today of 142, 50% gain over the last 4 days from the low to the high. That's crazy. And by the way, if you look back at, the tariff correction lows down to that sort of peak in November, late November, when a lot of these AI stocks started to kind of pull back a little bit, 634% rally there from $29 to $213. All that is to say, sometimes you find these continued rallies in those names you might not think to look, which for me was CRDO as well. So really, really cool stuff. I bet that they probably can continue higher.
Yeah, I'm with you. They seem to have momentum on their side, and the fact that they're going to have another conference call for everybody makes a lot of sense to me, that they've got more to say, man. Next up, we got Datadog. Well, these guys, they were up 10%, then they're 12, then now 15% or thereabouts to the upside. There, you can see it on that chart. Again, chart looks a little bit like Credo, right? I mean, it already had bounced, and now it's making a pretty substantial move, even despite the fact that it just came off of that bounce. So really amazing what these guys were able to do. They beat on the top and bottom. That part, I think, was obvious with the Q4. But what did they say about Q1 and what their expectations are? Well, they seem to be in line pretty well. Their revenue that they're talking about for the full year, near $4.1 billion. These guys seem to be moving in all the right directions right now, and I like what the stock is doing. Can it go up and test some of the highs? I think it could. I think very easily this thing could test up there something north of 140 of the recent highs. So I find it pretty interesting with Datadog. I think they did what they needed to do. This is security platforms for the cloud. That's a big deal. I think everybody's looking for that type of they like that world. And I think Datadog's doing a heck of a job. What did you think about this report?
I think it's great. And I think after a report like this, something that people usually lose track of is just how quickly we can repair those pullbacks. People look at it and they say, oh, well, Datadog's down from 200 down to as low as 100. They pulled back almost 50%. Well, if you look back from July to August, they had a pretty serious pullback. And then what'd they do? They ran from 123 up to 200, rallied about 65%, about 59 days. It's all possible with these really fast movers. And I think, just as John said yesterday, you either sit there and you stay the course and you're down with taking these 50% pullbacks, as Charlie Munger also said, or you get ready to be tactical in these names and you got to hear when these earnings are pretty good and say, hey, all right, this is a 10% move today or 16% move today. But how much more could there be as the market starts to get a little more comfortable getting back into software again?
Yeah, absolutely. And I think people are getting a little bit more comfortable. And I think a lot of people are understanding a lot of what a big portion of this having to do with what was going on with crypto, the investments from a lot of these various companies into crypto that's going to affect them in some way or another. I think that there's a lot to look at there and go through and try to figure out. How about Spotify? Now, these guys... Their guidance already was good. Their monthly active users, that's what I always like to focus on with this particular company. And I'll tell you what, that was better than expected. They reached 737 million, up 11% year over year. Not so bad. They also have these premium users that they've got. That was even up 10%. So 290 million people. I think Spotify is here to stay. I think there's a lot of people probably like you. And I'm an old fossil, man. I listen to AM radio half the time when I'm in the car and I'm listening to sports shows and stuff like that. And sometimes political type shows or whatever, just so I can keep up on things. But it's pretty interesting. But Spotify, look at that jump. I mean, these charts, when you go across, other than Upwork, you look at these last three charts, they kind of mimic each other, right? They all kind of fell back. They got into the early part of February on the fallback. They've had a little bit of a jump here and there. And now all of a sudden they have the numbers that are out there that people are impressed enough that it jumps pretty significantly. And that's exactly what we're seeing out of Spotify today.
Yeah. And, instead of hammering the nail down on Spotify, because I agree with everything you just said, and you're right, I do listen to Spotify, but I also like the radio. And I have a record player over here and all kinds of silly stuff. But what I'll say is this. So many people were quick to say that software stocks, Spotify, and et cetera are all dead because of this move. And you even have Michael Burry coming out here yesterday. I don't know if you saw this yesterday night saying, I'm working on something, all mysterious. And then he posts a picture of a Palantir chart going down. It's like, this is what you were working on? It's a picture of a Head and Shoulders and Palantir? Like, really? This is what we're doing? And it's not any disrespect to him at all. It's just, we know Palantir's down. We saw this, you know what I mean? It's so interesting to say, hey, we're going to just come out and call this whole sector dead. I just wouldn't be so sure. And this move in Spotify, that move in Datadog, what we're seeing in some of the other names that haven't even reported today, like Shopify and all these other names, it's all part of why I would not be so quick to just go out now after this month-long murder fest of these names and start shorting now. It just feels a little silly to me. I think the move is justified to the upside.
Yeah, and you know what? Sometimes you just got to sit back and understand, all right, this move has occurred already. Is there any more left? Because there could be, but probably not in this case because of the reasoning behind why was the selling happening in the first place. So I think there's a lot of room there for what you're talking about, and maybe the push to the downside. I'm not saying it's over, but I feel pretty comfortable right now in what we're seeing trading on days like today and yesterday and going back to last Friday. Yeah, the Dow was only up 1,200 last Friday. I mean, that's kind of average, and over 50,000. It still is. All right, man. I think we're ready for some sports, but I think we have a video that we were going to maybe throw up there. This one is pretty cool, and it's something that, as much as I am into the sport, and I love football, I truly do. I still bleed it, and everything else. But this was something. I'm watching the game. I'm watching the Super Bowl, and this one I looked past this. So it just shows you, no matter how much you might think, you might miss something. But this guy didn't miss it. So I think we got to hit this and see what player he was talking about that really was amazing. And it's the punter, of course.
You can argue the real MVP of the Super Bowl is a guy that's going to get little recognition, and that's Seahawks punter Michael Dickson. Listen, he was so big time from a field positioning aspect and on special teams. He booted 7 punts that averaged 47.9 yards, right? He accounted for 335 total punt yards, but he had 3 that were downed inside the 6-yard line. All 3 of those led to unproductive Patriots drives. The way he's able to create spin on his kicks too has returners scared to catch his kicks. We obviously remember 2 weeks ago when Xavier Smith
amazing, right?
punt for the Rams, but in the Super Bowl, this is all-pro Marcus Jones returning for the Patriots. Yet we saw an instance where he bailed on fielding the ball and it rolled down inside the 5. All night, Marcus Jones only returned 2 of Dixon's kicks for a total of 4 yards. One thing to note too about Dixon is that he's also the holder for field goals, and he had several good holds off of bad snaps. That is something that could get overlooked, but he was a key part in Seattle getting those 15 points. So there is a reason this guy is the highest paid punter in the game. He's elite at his position. And speaking about MVP, fun fact, in his last college game in the Texas Bowl, he won MVP for another legendary kicking performance. Special stuff. You can argue the real MVP.
Cool. That's pretty cool because you know what? Punters never get featured anywhere for anything unless they screw up. Unless they screw up, then they're gonna get all the media side of things or whatever. But this kid, there's a lot of meaningful things going on there. What this guy was talking about is pretty amazing. And you know, the problem is you're never going to be the MVP in the Super Bowl unless there's just absolutely nothing. I mean, the running back for Seattle was the reason, and he got the MVP. I mean, but he was moving their offense up and down the field like an absolute freak. He was running, and the way he did it and how patient he was as a running back was absolutely unbelievable. All right, so I've got a couple of things for you, but one of them this involves money, so it's not just football. This is about football and money. But the top 5 recruiting classes this year, and I'm talking about, this is not the days of going out there in the portal, which we already have. This is going to high schools and grabbing some of the best players in high schools. USC, number 1. Oregon, 2. 3 is Texas. Number 4 is Notre Dame. Number 5 is Alabama. And my takeaway from this is they all go after different things, right? Everybody needs something else. And one of the things that's happened at USC that's really happened in a good way is their general manager, Chad Borden. He came from Notre Dame. He's sitting at USC, and he's doing a magnificent job helping Lincoln Riley, the head coach there, go out and find the right players. Because for whatever reason, Lincoln Riley, who's not really a Californian, he's actually a guy from the South. He came from Oklahoma. He didn't recruit California very well his first couple of years. He just didn't. And now they're doing it. And because of that, I think it's turned around USC into another year where they're going to be a power. They're going to actually be a very good football team again, which makes it interesting. Oregon's been a good football team. But here's the thing. How about the money behind this football? And I'll just use one example because Bama has all kinds of contributors. They've got huge money that they can go out and give these players money. Notre Dame, same thing. Texas, same thing. Oregon, USC. But if it's Oregon, Phil Knight, what Phil Knight is able to do at Oregon is basically just give them an open checkbook and say, hey, I've got almost all the money in the world. So here's what I'd like. I want us to be good. I want us to be relevant. And I want us to fill that stadium every single week. And so they do it. Everything goes status quo. They've got a great coach. They do everything. But money is really what gets this whole thing around. And if you look at USC, Oregon, Texas, Notre Dame, and Bama, you're looking at some of, not all of, but some of the biggest money makers in all of sport and in all of what we're seeing there. It's absolutely unbelievable. What do you think about the world that has become college sports, where you've got all this money and all the, what are they getting out of it? What is Phil Knight really getting, other than pretty excited that his team is doing well? But it's pretty extraordinary when you see the tens of millions of dollars that flood into these guys, and they've got that money to be able to distribute around to all these various players. What do you think about that whole thing as far as college football has morphed into?
I mean, it's probably a double-edged sword, right? I feel like you're right. If you've got all the money in the world. And USC football, by the way, when you were talking about it, I said, how much money do these guys make? Well, if they had a valuation, it looks like USC football's valuation would be about $1.4 billion. Tens of millions of dollars in annual revenue, massive growth, new media deals. So you're looking at that and you're saying, okay, well, if you've got the money, you may as well spend it. I mean, you can't hate the player. You can't hate the game either. You just got to play the game if you want to win the game. And if the game is, hey, spend money, recruit the best guys, and you want to win, then I guess that's the way to do it. But it is a little weird that it's so money oriented, you know, when it probably wasn't always that way. I guess it's a double-edged sword. I guess you're far more qualified. How do you feel about it? Do you think it's a good
I'm not happy about it. I think they opened up Pandora's box without really thinking it all through, number one. Number two, they've got all of this NIL money and everything that goes into this whole thing, and it's really not NIL. What it is it's just a way that the schools can do what they used to do illegally, which is hand a guy a bag of cash and go, okay, man, you want to come here? I'll never forget, back when I was playing, our coaches went down to watch Oklahoma play one of their games or whatever. And when they got there, the one thing that every one of the coaches, when they came back, said to me, they go, you should have seen the parking lot. And this is before NIL. This is, I played when there was nothing like that, but these guys were getting a fair amount of money, man. They were getting paid pretty good. Bosworth and all these guys were doing okay. Troy Aikman, they were doing pretty well. But that was college football, and it was a little bit different. And when you got caught, you didn't just lose something. You lost a lot of money. SMU was very famous for getting caught. And man, once you get in the penalty box, it's a tough road to get out of that thing after a while, and when the NCAA comes down on you. All right, I got one more for the NFL. So this is why the NFL is the biggest and the baddest of all the pro sports. They have a salary cap. And because of that cap, it becomes something pretty interesting this time of year, because now we're approaching free agency. The next thing you know, they're going to have the combines followed by the draft, all of that. And you've got to figure out, okay, well, how are we going to distribute the money that we've got? Well, many of these, and I know you know this already, but many of these teams are already in the penalty box. They're already way over the cap, and they got to figure out how the heck to get back underneath there without having to have some sort of penalties put on against them. The cap space did get a little bit better, though. Now the cap has jumped up to $306 million for the year. So not so bad, right? I mean, that's why these owners are so happy, because they make a heck of a lot of money with these teams. That cap going up is just a great sign of the kind of money that's been coming into the NFL. Here's the schools, or not schools. Here's the teams that have the biggest cap space. Washington's got nearly $100 million. The Patriots have $90 million. The Titans have about $75 million. Bears about $75 million. And the Texans have about $70 million. What does all that mean? It means that these free agents, specifically them, and then you can go over to the draft kids once you get them. But in the free agency market, there's plenty of room there to sign some of these players for these different teams that really are looking for something that they're missing. Maybe it's a quarterback, an offensive lineman, a linebacker, an edge rusher, and wide receiver, whatever it might be. But the cap space is there. And what do you think about that? I mean, the fact that these guys have all the world of money to be able to spend on this, but they still have to look at that cap at $306 million and say, you know what? We can't get over that, because that all of a sudden, becomes a real problem for these different teams. And now they've got to really start to move around the roster. But what do you think of this? I mean, this is nuts, but it's the NFL, and these guys are doing well, and the Super Bowl proves it out. I mean, think about how many people were watching, the money that's generated for these guys. It's unreal.
Yeah, so maybe you could tell me this. Why do they have a cap? Is it just to keep it kind of fair? Do you think it's a good thing that they have a cap? And the second question that I would just ask you, it looks like the Vikings are also 45 million in the red against their cap as well. And I was going to ask you what you would do to fix that problem. Looks like this article I'm looking at has some ideas of what they would do, but I don't think they're going to know quite as well as former pro football player Pete Najarian. So I'll ask you.
Well, I would say this. I would say that the reason they have a cap is it's why it's not the same teams every single year. Look at baseball, for instance. who goes to the World Series pretty much every couple of years, whatever? Somebody from New York, Yankees, Mets, they got a hell of a lot of money. Somebody else, who's spending a lot of money. Well, the Dodgers spend a shitload of money. So, there's another one. And it's kind of the same teams every single year because they've got the bigger market, they make more money, and that is a huge advantage. So you've got teams like Green Bay. Green Bay, great franchise. I got no criticism at all, but they don't have the kind of city in terms of numbers and everything else. They don't have anything close to what San Francisco's got or LA has, or, all these others that have all this. So by having the cap, everybody's on fair ground. And I think these other sports would be a lot smarter if they actually used the cap the way that the NFL has, because if you look at yes, there are some dynasties out there, but a lot of that has to do more with the players than it does the kind of money that was being spent, like New England being a great example with Tom Brady. I mean, was it the money they were spending? Not really. It was Tom Brady. And Tom Brady was so unselfish that he would take cuts in his salary to get other players to come play there because they had a salary cap they had to stay under. I mean, wow. That's a guy who wanted to win games, and he did. He had, 6 Super Bowls, something like that? Not so bad. He did a pretty good job. But yeah, I think this whole thing is interesting. It's fun. It's it's part of the financial thing, and that's why there are guys that their entire job is to constantly be on top of the salary cap, and every team in the NFL has that guy who actually goes through these numbers and lets them know who they can maybe get in free agency and who they can't afford to get in free agency, because of the fact that this keeps it very, very balanced. And I think that's I give the NFL a lot of credit for that and sticking with that for all these years that they've been doing it. It's pretty cool. Anything else, man?
Nothing else that I got. Just, thank you for having me, and to everybody else out there. If we have another one of those pullback days, whether it's tomorrow or a month down the line, try not to buy into all the fear that they're going to give you, no matter what, about anything.
Yeah. They love to sell fear.
Yes, they do.
That sells really well. All right. Thanks a lot, man. Thanks for checking in with us. Really appreciate you filling in, and I'll see you next time. Have a great day, man.
See you.